Gold trades lower on economic data, and Ford announces a bunch of lithium deals. You're listening to Kitco Roundtable. I'm your host, Michael McCrae. Paul Harris is here.
Hey, Michael. How you doing?
Let's turn to macro. Gold lost more ground at the end of the week after the U.S. annual core Personal Consumption Expenditures price index came in at 4.7% in April versus a consensus forecast of 4.6%. The U.S. central bank favors this gauge because the core inflation strips out volatile food and energy prices. Gold fell following the data release, with June Comex gold futures last trading at 1946.8 an ounce. Data shows that inflation may not be coming down fast enough, which could increase bets that the Federal Reserve still has more room to tighten. Major gold miners are down for the year. Newmont is off 18% year to date, and Barrick is down about 5%. Turning into industrial metals, copper had a bad week on Chinese concerns. China's economic recovery is being held back by lagging private sector and household concerns, reports the South China Morning Post, noting that private sector fixed asset investments since China reopened at the end of last year had fallen 0.9% in December to 0.4% in April, according to the National Bureau of Statistics. Youth employment is also up. Copper hit a 6-month low midweek before recovering. Last checked, it was trading at around the $3.60 a pound range. A barrel of oil is in the low 70s. Paul, a lot of mining news.
Yes, a very interesting week. And I want to start with, the gold breakout is coming, says Incrementum in its latest annual In Gold We Trust report. They said that the breakout could come late summer, early fall, a breakout moment for gold and gold equities, which have largely been ignored by generalist investors despite their improving economic performance. It also highlighted reserve replacement could be a spark that could ignite interest and activity in the sector, given that it notes that the reserves of the top 10 gold producers have fallen by 33% since 2011. Moving over to lithium.
I was covering that report, Paul, and that's from a friend of Kitco, Ronald Peter Stoffele. But it seems to be an ongoing theme with, I've noticed with the Matterhorn people as well. They're talking about this idea of, how would you say, compounding events or ratcheting events. So they talk about the inflation. They talk about de-dollarization. They're talking about geopolitical concerns right now. So it's really kind of an issue right now. You have all of these factors that favor gold very well. So everybody's talking about it being at the cusp, but it has been a tough year for gold, despite having having that breakout at the start of the year above 2,000. Sorry, you were moving. I was just adding on, but you're moving on to lithium.
No, you're more than welcome to do so, Michael. They talk, as you say, they talk about the triple whammy of showdowns, as they phrased it. That was the subtitle of the report this year. 400 pages of detailed research. I've only really dipped into it. A lot more reading to do for me over the weekend. So I really sort of recommend that for our listeners and viewers. Okay, lithium. Brazil's Sigma Lithium received payment, including a 9% pricing premium on its first shipment of material under a 3-year environmental offtake agreement to sell its green tailings and green lithium to Yohawa, a lithium chemical refiner for electric vehicles. Sigma began production from its Grota do Cirilo spodumene operation in Minas Gerais in Brazil in April. The plant uses 100% renewable energy, recycled water, and dry stack tailings, and expects its tails to be upcycled into lithium batteries. The good news there for Sigma. And also it's interesting that premium pricing is being paid on low carbon emission and high sustainability lithium. In gold, Banyan Gold is looking to expand the resources at its Ormac gold project in Yukon in Canada to 8 to 10 million ounces to really get the attention of large gold miners, having just released an inferred resource this week of 6.2 million ounces, grading 0.61 grams per tonne. The company is also starting metallurgical test work for both mill and heap leach processing options as it seeks to show how Ormac could be processed. Finally, the US Geological Survey said that copper is not a critical mineral. The Director David Applegate said at the start of the month that while in 2022 it assessed copper as having a relatively high economic vulnerability score, the vulnerability was mitigated by a relatively low US net import reliance on foreign supplies, which predominantly come from Chile, Canada, and Mexico, which he said are reliable trade partners with whom the US has free trade agreements.
Sticking with the critical or maybe the non-critical metal theme, Paul, that's Ford Motors Company, which really made a big announcement at the start of the week when it announced that it inked a number of supply agreements. Those include Albemarle, Nemaska Lithium, and Compass Minerals. Albemarle will supply more than 100,000 metric tons of battery-grade lithium hydroxide for approximately 3 million future Ford EV batteries. The 5-year supply agreement starts in 2026 and continues to 2030. Nemaska will supply Ford with lithium products, including lithium hydroxide, for an 11-year period. Agreement acquires the delivery of 13,000 tons of lithium hydroxide per year. Ford's big move comes after a lot of major mining deals before it. Early this year, GM announced $650 million deal with Lithium Americas. Commenting on Twitter, lithium pricing specialist Joe Lowry said that Ford is a little late to the lithium party, and it is doing a little bit of a catch-up. Ford has done other deals, though. A year ago, it signed an offtake with Ioneer as well as Liontown Resources. Ford is the second largest US-based automaker and fifth largest in the world. Paul, do you have a number for us?
I do, Michael. My number this week is 22, or more precisely, 22 years. This is the number from the Mining Stock Journal. It noted that in relation to both the S&P 500 and the price of gold, the mining stocks in general are cheaper now than at any time in the last 22 years.
Compared to tech, I guess is what you might say. So my number of the week is 34%. Zinc is taking it on the chin, also getting walloped by China data and oversupply, similar to what is happening with copper. Prices have plunged almost 34% in the month of May, a high in January of 2023 rate hikes. The metal is near a 24-month low. Zinc miners like Teck and Hudbay Minerals have taken double-digit stumbles in the past month. That's it for us. Paul, you have a mining show to announce.
Yes, we're starting the CGS event in Mexico in February in Puerto Vallarta, a 2-day event focusing on copper, gold, and silver exploration and development projects. Hopefully, Kitco Mining will be a media partner for the event. Lots more to come about that.
Once again, the date on that, Paul?
6th and 7th of February.
Of 2024, is that correct?
Correct, yes.
That's it for us. You can follow Paul at Paul Harris Gold, me at Michael McCrae. That's with 2 C's. If you like what you hear, tell a friend. Don't forget to subscribe. On behalf of Paul Harris and myself, have a pleasant weekend.